Hello and welcome to Think Ahead, the London Business School podcast that brings you sharp analysis, bold ideas, and the latest research to help business leaders navigate a rapidly changing world. I'm Sergei Guriev, Professor of Economics and Dean at London Business School. Today, I'm joined by Professor Hélène Rey, Lord Bagri Chair in Economics at London Business School, Vice President of CEPR, one of the most important voices on international finance and monetary policy. Her work has shaped how we understand the forces behind currency dominance, in that case, one single US dollar currency dominance, financial flows, and macroeconomic stability. Hélène has published extensively on these topics and actually defined what we call now global financial cycle, reduced what's called trilemma to dilemma, showing how one currency actually shapes the whole world's volatility in asset prices, risks, and interest rates. Hélène's also worked on exorbitant privilege. This is the term which was coined by, at that point, Minister Valéry Giscard d'Estaing, who then went on to become a president of French Republic, and together with Pierre-Olivier Gourantia, who is now chief economist of the International Monetary Fund, Hélène has worked on measuring exorbitant privilege, showing how the U.S., because of the special status of U.S. dollar, actually has specific benefits, this quantifiable exorbitant privilege. And today we'll talk exactly about this. We'll talk about the historical dominance of the dollar and shifting landscape of global currencies. Hélène, welcome to the podcast.
Thank you very much, Sergei. A lot of big topics here that we should be discussing today. And I have to say, these topics, I've been working on them for a very long time, in particular with Pierre-Olivier Gourantia, and essentially since the beginning of the 2000s. But it does seem that these days, they are really, really important topics to revisit with the geopolitical situation and technological innovation and everything that has to do with the US economy these days.
And U.S. economic policy in particular. 2025 is a unique year. We observe the highest economic policy uncertainty we've seen ever. Actually, in the history of measuring economic policy uncertainty, economists have never seen that. Your work is also on co-movements of asset prices, interest rates, different currencies, and this is the year when some of the traditionally, historically observed co-movements and regularities have actually not been observed. And so what has happened in 2025? Why has your work become even more relevant today?
So I'm going to get into that, but so I'm just going to take a little bit of a step back exactly to explain why 2025 is so different from the past. So let's see a little bit what historically has been true with the US dollar. So we know that the US dollar has been at the center of the international monetary system, essentially on and off at the beginning of the 20th century, but really after Bretton Woods, after 1944, and maybe to the surprise of many, has remained the main international currency after the collapse of Bretton Woods, after 1973, where, the dollar was not backed by gold any longer. It was not supposed to be the currency at the center of the international monetary system, where everybody else was pegging to the dollar, and the dollar was convertible in gold at a fixed price until 1973. After that, we went into a much more supposedly symmetric system with fiat money, so no more commodity-backed. And yet, to the surprise of many observers, the dollar has actually retained all its roles as an international currency, and by some measures has even been more dominant, maybe than it was under Bretton Woods. So what are these role of international currency, and why has the dollar been so special in the international monetary system? So one of the main role of an international currency, and in that case of a dollar, is to be a medium of exchange, and really an important medium of exchange. So to get this, I think Charlie Kindleberger, who was a professor of economic history at MIT, had a great analogy. He was talking of currencies just like as languages. We speak English. So, lots of people speak English. That enables us to communicate. The network of people speaking English is really large. So we can communicate with very many people. That makes English a very useful medium of exchange. If you speak a language that is very, very narrowly defined within borders of a small country, it's not going to be great as a medium of exchange. Well, in the realm of currencies, the dollar is like English. It's really useful for many, many different transactions. It's used to price many markets. We know that the commodities tend to be priced in dollars, for example. We also know that a lot of countries actually fixed their exchange rate vis-à-vis the dollar. Despite the end of Bretton Woods, you still have quite a lot of the world economy, which is effectively a dollar area, where the dollar is a unit of account, which is really important because they fix their exchange rate vis-à-vis that currency. And by doing that, that also gives, by the way, to the Federal Reserve a very disproportionate impact on the world economy. And this is one of the reasons why we have a global financial cycle, not the only reason, because this is also, the Fed is also important for countries which don't necessarily fix their exchange rate, as the Fed is really setting the tone in financial markets and has a big effect on risk-taking in financial markets everywhere, including for the countries with flexible rates. But essentially, the importance of the dollar in the world economy comes from the fact that it's used in many, many different transactions. The unit of account, the dollar, is used by many countries. And also, there are lots of liquidity, lots of short-term assets, lots of US treasuries, which are used in many markets. For the repo markets, we have the euro-dollar markets. So there are lots of dollars circulating in the world economy and used by the private sector and also by the official sector, in official reserves, etc. So the dollar has been the safe asset also in the world economy, a really important safe asset. And that means, and this is where I'm going to go to the co-movement thing, that means that historically, when we have had big stressful episodes, global crisis, what has happened is that a lot of investors have flown into safety. That means they have gone into US treasuries, into US government bonds. What happened in 2025, as you said, is very, very unusual. Because after the Liberation Day, the so-called Liberation Day, which was April 2nd, 2025, we have had co-movements which were absolutely, completely unusual for the US dollar. We saw that the dollar went down, and we saw that the yields on US bonds went up instead of down. So that meant people were going out of US and into all kinds of other countries, all kinds of other assets. So that was really a very unusual pattern because uncertainty had gone up a lot because of tariffs. So you could see that as really a stressful period. And yet there was no flights to safety into the dollar. So that's very disturbing in some sense because that could be a sign that the type of equilibrium we were in maybe is shifting a bit. Maybe it's eroding a bit. And the very big question is, how much? And was it just a one-off or is it something much more sustained? And that's really, I think, where the big questions today are, because obviously that has many implications for international financial markets.
Kindleberger is famous for what's called Kindleberger's gap, right? The period between World War I and World War II, when pound was already losing its dominant status and dollar was still not there, not dominant enough to pick up this role. And maybe we are in the period like this today, right?
Absolutely. And that's really important, actually. And that also gives me an opportunity to go a little bit back into the exorbitant privilege that you mentioned before. So it is true that between the sterling and the time where the dollar took over, there was this period which was full of uncertainty, full of volatility, because having a main international currency like sterling used to be before the dollar gives a kind of global public good to the world economy. It helps stabilize because it decreases transaction costs across countries. There's a lot of stabilization of, in that case, exchange rates were kind of fixed also under the gold standard. And essentially London was the financial center of the world. There was a lot of financial flows going in and out of London. And the UK economy could act a little bit as an importer of last resort for the world economy. So that's something that is very much linked to the exorbitant privilege and that the US, in a way, has also been providing. So what is that? If you are the issuer of the international currency. Everybody wants your liquidity. Everybody wants your short-term debt. So that means that in any states of the world, you are able to issue debt, to issue short-term assets, which are in high demand by the rest of the world. And you can therefore borrow from the rest of the world and buy riskier assets or buy imports during distressed time. And that's an exorbitant privilege. That's the fact that people are willing to essentially finance you, buy your debt. They know it's safe debt, right? And with this liquidity that you get, you can buy companies, you can import, you can do things that are going to be helpful in some sense for the world economy. So that can be helpful, if you are an importer of last resort when there are very stressed times, that can be helpful. That can also be seen by other countries as a problem. So De Gaulle, in the 1960s, resented the fact that the US could issue these dollars, everybody would use these dollars, but the US would buy European firms with those dollars. So he was saying, essentially, this is unfair, right? This country can refinance, doesn't need to repay its debt. Everybody wants dollar debt all the time. It uses these dollars to buy European companies. That's an exorbitant privilege. That's what he thought, and that was indeed voiced by Valéry Giscard d'Estaing, who was the finance minister at the time.
So in your research, you actually quantified the exorbitant privilege. How large is it in dollars, in percentage terms, in percents per year? How did you measure that?
This exorbitant privilege is now essentially close to zero. So this, together with the maybe, let's call that, unpredictable policies in the US, might mean that we are close to this Kindleberger gap that you were mentioning. And if we are there, so if we are in a situation in which the US does not want essentially to be the hegemon anymore, or maybe is not able to be the hegemon anymore, then we are close to that gap. The question is, who is the next? Or how is the international monetary system going to transform itself to deal with this decline in the current hegemon? And that's, again, one of the very key questions of today, I think.
So, indeed, if we are at this Kindleberger moment, we can try to look for alternatives to the dollar. In 1930s, especially in 1940s, the dollar emerged as a natural alternative to the pound. Today, we have euro, which has its own advantages and disadvantages. You have Chinese currency, you have cryptocurrencies, including stablecoins. You have gold, which has recently appreciated a lot because of that, I guess. What would you bet your money on if you had to choose the alternative to the dollar?
So it's all a matter of horizon as well, right? So if we look around, so it is clear that in terms of economic size, there's only one second big economic area in the world economy which has developed financial markets, and that is the euro area. So we obviously have also China, which is extremely important in international trade. Just like Europe and just like the US, they are relatively on the same side if we look at their importance in international trade networks. But China has capital controls, right, for the moment, and very underdeveloped financial markets and very underdeveloped financial flows. And that's really, not going to change very soon. So if we just look at what is plausible now in terms of increased internationalization of a currency, I would say the euro is the second one in line after the dollar. However, that doesn't mean that the euro has a lot of the properties that made the dollar such an important international currency. The problem with the euro area is very well known. It's not fully integrated, and that's especially true. That's true, unfortunately, also for goods market and certainly for the service sector, but that's also very true from a financial point of view. The second issue is that if you look at the US, you have had these massive inflows, especially in the last 10 to 20 years in the US equity markets. You have had very high returns in linked to the new technologies, etc. So investors also want good Sharpe ratios. And Europe has been lagging behind in a lot of new technologies. So that also has been an issue, which has been flagged very prominently in the Draghi's report, for example, of a report of Enrico Letta's, the lack of investment of Europe, the lack of this unicorn in the new technologies. That has been a problem for the euro area, which makes its capital markets also not as attractive, maybe. So that's something that also has to be really tackled. So Europe is big in international trade. It has developed financial markets, but not integrated enough. It lacked this savings and investment union that everybody has been talking about for 20 years. But Draghi has really said, now is the time. And maybe we are seeing that people are a lot more ready to actually act right now. I don't know if you saw, but the Chancellor Merz actually very recently has said we need a pan-European stock exchange, right? So I think things are happening, but for the moment, we still lack the integration. So the euro is a second international currency. It's actually a regional international currency. There are obviously countries in Europe which don't have the euro, that use euro for trade invoicing, which peg to the euro, etc. So in the region, it's widely used, but it's not a global currency. Like the dollar is used in Latin America and in Asia, and in North America, obviously. The euro is more like a regional currency so far. So it cannot quite make it right now. Now, if we project ourselves, in a little bit in 20 years or so, it's likely that the monetary system will be a bit more multipolar. So there will be hopefully more euros. There will be probably more RMB by then as well. And maybe other currencies will have emerged. Now, the big unknown to me, and I think it's also a very interesting topic for discussion these days, is what does the emergence of these new technologies, the blockchain technologies, CBDCs, the central bank digital currencies, but also stable coins, also potentially other cryptos, what does that mean for the emergence of these new currency areas? Are they reinforcing the role of the dollar? Are they shifting the dollar aside? Could we really think of a currency which would not be linked to the dollar or to the euro or to yuan that would kind of become very important? I don't really see that, but this is something, this is worth considering. How does technology affect the international monetary system? It's one of the very, very interesting topics of the day, and there's a lot of action among central banks and among the private sector around this.
Before going there, let me ask you about Euro still. So all these joint bonds that you mentioned, ESM bonds and next generation EU bonds, they are very recent innovation. The joint budget of the European Commission is 1% of European GDP. So if you are asked for policy advice, how would you promote Euro as a safe asset? How would you make Europe great again in 20 years and 30 years, so euro is actually growing as a competitor to the dollar?
So I'm not sure I would use the Europe great again slogan, but I get the idea. So the thing I would say, so first of all, the next generation EU bonds were indeed conceived as a one-off, right? Yeah. So by definition, it's not something that is a financial asset that can really be relied on for portfolio construction and all that. So this is why it's not in indices. So this is why actually the financing conditions were not what they should be in terms of spreads. The spreads was above, the Bund and stuff like that. So this is really something we don't want. We want a proper financial asset that is jointly issued, that is predictable, and that is there to stay. Now, the way I would go about it is that I would not, given the political economic constraints, I would not say, we need to mutualize large amount of debt right now. Even though I can see an argument for that on pure economic ground because of liquidity, because of volume, and there are some policy proposals which are around this. But I think political economy of this is very difficult. The way I would go about it is that I would say, look, at this point in time, it's obvious that there are very, very important European public goods which have to be financed. The first one is defense. There are some defense technologies, future of defense technologies, which cannot be done nationally. They just can't. If they cannot be done nationally, they have to be done by a coalition of countries. This coalition of countries will benefit from the public good. It's very natural. It's a big investment. We need to do a lot of catch-up in technology, it's very natural that this big investment is made upfront by a coalition of countries. So jointly issued debt. Because we have to catch up, we need debt. We cannot finance everything right now with fiscal resources. So I would construct a very tight governance system around European public goods, starting with defense, very well defined. And I will construct the financing vehicle behind that to issue very well structured European bonds. The volumes would not be enormous in the first years, but would, if everything goes well, would grow over time. And I would finance this catch-up first by everything by debt for a certain number of years. And then I would just roll over some of that debt. So that would ensure that, this stock of debt would be there, would be predicted with a calendar of issuance, etc. And after some years, I would attach, obviously, also fiscal resources to this. And, then one can think about what these fiscal resources might be. There's VAT that is paid by the countries of Europe into the budget. We can think of other sources, but, points of VAT seems like a good candidate. And this is how I would start the thing, by having really a very good governance around it. And then, I'm very confident there are lots of European public goods which will need financing in the long run. And this seems to me we would have the right structure. So that's what I would say. And that's what I would do.
Thank you. This is a specific policy proposal which may indeed be implemented. Some people are very pessimistic about European leaders' ability to make bold decisions. But as you mentioned, we did have a Hamiltonian moment in 2020, which surprisingly was a major step forward. So that may be repeated today after Draghi report, after Enrique Letta's report, and security threats that help focus minds.
As Jean Monnet always said, Europe progresses during crisis times. I think we are facing pretty serious crisis, so I think it's a good moment to think about that and certainly to push that.
Thank you. So let's go back to the issue you already mentioned, the digital currencies. Digital currencies come in different shapes and forms. You mentioned currencies like crypto, like Bitcoin, permissionless blockchain. You mentioned stablecoins. You mentioned digital currencies of central banks, CBDC, central bank digital currencies. For you, what do you think about their perspectives to become an alternative to a global currency like US dollar?
So this is a jungle, right? We are currently living in a jungle of cryptos, of different technologies. I think what is very special about this point in time is that because of geopolitical tension, largely, there are lots of players who want to develop independent payment systems, right? And that becomes a very strategically important point, I think. So we have central banks thinking about their own CBDCs, central bank digital currencies, mainly for domestic purposes, but also cross-border, thinking of linking them up. We have also a lot of, or some countries, pushing some types of cryptos, such as stable coins. We have seen the US Treasury recently pushing a lot US dollar stable coins in a way to increase dollarization, essentially, to make sure that the international role of the dollar is not challenged, and also possibly to ensure that there is a sustained demand for US treasuries. So why is that? Because if you issue a US dollar stablecoin, you need to hold on the asset side of your balance sheet, essentially liquid assets, and a lot of that would have to be US treasuries. So if you push the issuance of US treasuries, that means you kind of make sure that there is a lot of demand for your US dollar treasuries, which helps you to finance your budget deficit. So that's one of the goals of the US treasuries, very explicitly stated by actually the US. Okay, so there is this dimension that is very important, and then we have also obviously native tokens like bitcoins, which are still the most important market capitalization in cryptos. And there, I think, and I've always told my students from the beginning, Bitcoin, it's coin, but it's not money. It doesn't have any of these, attributes that make money money. So all this means that I don't think the landscape, the geography of all these crypto assets are stabilized yet. We are still very much in the middle of this. And it's terribly interesting, but we also don't exactly know how it will end.
Let me follow up on the stable coins. Indeed, before recent regulation in the United States, the Genius Act, stable coins were unregulated. They promised that $1 is $1. So you mentioned Circle and Tether, the biggest two US dollar denominated stable coins. But we did observe bank runs on those types of instruments exactly because they were not regulated. Essentially, these were unregulated retail banks. And of course, in the banking system, central banks or other regulators regulate banks exactly to reassure customers, to ensure deposits, and to reduce risk so customers have certainty and don't engage in bank panic. But after the Genius Act, there is now a perception that those companies now have to hold liquid assets, dollar-denominated assets, which is indeed, as you rightly said, U.S. treasuries, U.S. government bonds. So if that happens, this is no longer an unregulated bank. It's a regulated way for retail investors to hold government bonds. And it kind of becomes almost a fintech in the sense that you buy Tether or Circle, and you know that you're actually holding a stake in U.S. government bond portfolio. You buy a U.S. government bond portfolio index or something like that. And that, as you rightly said, reduces transaction costs of owning bonds, so helps U.S. government fiscal situation. So what's wrong with that? It's a technological innovation which helps the U.S. to indeed push more bonds to retail public, but is that the right perception, which is now dominating after the Genius Act in the U.S.?
So first of all, Tether, which is still the biggest by market cap, is not in the U.S. jurisdiction. It's in El Salvador. Mm-hmm. So it's and it turns out that when we catch glimpses of what's on the balance sheet, we find out that there's not only very liquid asset. There's also some Bitcoin, surprisingly enough, on the asset side, which is not exactly a safe asset. And then I would argue that even when you have liquid assets and, short-term government paper or government bonds in general, there's never zero risk. And we have seen a lot of the...
So Silicon Valley Bank.
Yes, we have seen a lot. And in the past, we have seen money market funds also getting into trouble. So there is always the risk that you are breaking your peg. And there's therefore always the risk that you're going to have a run. And if you have a run, then you don't have a liquidity. Usually what happens if it were a bank, if you have a run on deposit, we have deposit insurance. And we would also have, in most cases, the central bank. We can always provide liquidity as the lender of last resort. So that should reassure people, and that would essentially get rid of runs. In the case of these instruments, so far, at least, we don't have that backing. We don't have it. And there was an interesting, also historical, maybe, comparison to be made. There's a euro-dollar market, which are, dollar being issued outside the boundary of the United States. When it started, the euro-dollar market was not backed by liquidity from the Fed. It was not. And so the market remained relatively small. People were willing to use it, but they knew that if there was a problem, there wouldn't be anyone necessarily coming to the rescue. And then after a while, actually, the Fed gave an implicit guarantee to that euro-dollar market, and that's when the market grew a lot. So there's an interesting question, which is it the path that, the US dollar stablecoin is going to take as well? But if it is the path, if you give an implicit backing, an implicit guarantee, then you will need to be more regulated like a bank. So there will be more regulation. And in particular, one issue currently with US dollar stablecoins and stablecoins in general are all the anti-money laundering restrictions, the know your customers regulations, the anti-terrorist things. And we know that these things, cryptos in general, circulates in places where you don't want them to circulate for reasons that you would not want them to circulate. So it's not that we operate within the radar. A lot of these transactions are below radar, and that's something that would, not sit well with a backing, an explicit backing from the official sector.
I can imagine no government likes tools which help tax evasion, right? Governments want to collect taxes, and so governments will go after tools, instruments which help minimize tax revenues.
You would think.
You would think. Yeah, one would think. Some government leaders actually
that may not be universal.
Act differently. That's right. So I wanted to bring this conversation closer to business. We are two academics. We can talk about interest rates and currency exchanges for a very long time. But if you take your rather pessimistic or uncertain conclusions, saying that we are in a state where we don't know what's going to happen, there are many risks, a lot of volatility. What are the actionable insights from this analysis? What a business leader should do in terms of exposure to currency risk? Most of our listeners operate in global economy, are actually exposed to shocks in many geographies. What would you advise them to do?
So definitely, indeed, there's an increased risk of currency volatility for all the reasons we have been discussed. And there was a manifestation of that, which was the Liberation Day tariff events. And I think after the Liberation Day, we have seen something that makes a lot of sense to me, which is that a lot of investors, a lot of big dollar holders have been hedging their dollar exposure a lot more than they used to. So it used to be that everybody was piling up on the dollar, taking both the currency risk and essentially the equity risk, and making very happily high returns. And I think we are a little bit out of that world now, because it's very clear that there are lots of risks to the stability of the dollar for policy reasons, for also maybe geopolitical reasons, and for fiscal reasons, right? So we didn't talk about the increase in debt to GDP ratios. That is very true also for the United States, and the stability of the net external position of the US, which is currently minus 90% of GDP roughly. So it's a fairly sizable imbalance in the world economy. So because of that, I think it definitely makes sense to think more about hedging currency exposure, and that has explained some of the dollar slides. And so I would definitely think that, this is a very rational response, and it has to be thought about. So the hedging strategies are definitely becoming really important. On the adoption of of cryptos and stable coins, etc., I would also caution people in terms of the quality of the money, right? So paying very close attention to the quality of the objects which are used either for payments or even for investment purposes. So gambling is one thing, but also using, maybe stable coins for treasury, for transferring money across countries, etc. These things are not perfect substitutes, as we said. Some are going to be much more reliable and robust than others, and whether they are the preferred instrument or one should really think more about tokenized deposit or other types of instruments and who is issuing them, in which conditions, under which regulation, is extremely important. The legal system behind all of this seems to me really underdeveloped. So if there is an issue, what happens? What happens, right? That's really something to have in the back of the mind. How do I recover whatever my assets were? Is there any way, conceivable way, or actually credible way of recovering anything? And the answer might be no. So I think that's really something that should really be at this point in the back of the mind of everybody kind of operating in those markets.
I think summarizing what you've just said now and before, you wouldn't advise people to use crypto as an alternative for the dollar. Gold as well. Gold is also, in the end of the day, a speculative asset, which is also very volatile, very valuable today, but who knows what's going to happen tomorrow. Bitcoin is also very expensive today, but who knows what's going to happen tomorrow. But what you're saying, if there is a proper legal base for tokenized deposits, for digital currencies of central banks, this is something which probably is a good payment instrument.
Yes. So I can see that there will be some very reliable instruments that will be developed, probably in conjunction actually with CBDCs, where there will be perfect interoperability between CBDCs and some private sector issued instruments, which will be programmable, which will have all the desired features that people might want, but that will be operating within a well-defined legal framework with some regulation that will be very well defined. So by the way, in Europe, there's a regulation called MiCA, and it still remains a lot to be tested because Europe has not developed a lot of euro stablecoins or anything like that, and so there are lots of issues there. But at the same time, the ECB is also thinking very much in terms of developing a retail CBDC and a wholesale CBDC, and there are many other central banks who are thinking along the same lines. Plus, there's central banks who are thinking of hooking up their CBDCs in order to facilitate cross-border payments. So within that landscape, I think at some point there might be some very interesting technological alternatives which will be a lot more robust maybe than some of the existing ones today.
So thank you very much, Hélène. Unfortunately, we are coming to the end of this podcast. In the end of each podcast, we ask one signature question, which today is, thinking ahead, what is the most important long-term trend in global monetary system that business leaders should watch and prepare for?
Fragmentation.
Thank you very much, Hélène. Thank you, our audience, for joining us on this episode of Think Ahead. Today's conversation offered a powerful lens into the forces shaping global monetary leadership, from enduring dominance of the dollar to the euro's potential role in this fragmented, fractured financial world. As geopolitics, the rise of digital finance continue to evolve, the currency landscape is becoming more complex and more consequential. We hope that this episode has sparked new thinking about how these shifts could impact strategy, policy, and global business. We'd love to hear your perspective. How is your organization responding to changes in the global financial order? Share your thoughts on Spotify or YouTube using the hashtag ThinkAhead. To stay connected with the latest insights from our faculty and global business leaders, visit london.edu/think. And don't forget to follow and subscribe so you never miss an episode. Thanks again for listening, and until next time, keep thinking ahead.